The unthinkable has just happened. For decades, the United States relied on a rock-solid deal with Saudi Arabia to keep oil priced in dollars, securing America's grip over the global economy. But now, that deal has cracked wide open. Saudi Arabia and Qatar, two of the world's most powerful energy exporters, have officially joined BRICS and announced they will switch their oil trade to the Chinese yuan. This isn't just another headline. This is the kind of shift that rewrites history, undermines Washington's dominance, and reshapes the world order. Before we dive deeper, make sure you stay tuned until the very end, because the ripple effects of this move touch everything from the gas pump to the value of the US dollar in your pocket. And if you want to keep up with the biggest geopolitical and economic shifts shaking the globe right now, don't forget to follow, like, and share so you don't miss out on critical updates like this. For nearly half a century, the global oil market has been dominated by the petrodollar system. This arrangement, born in the 1970s, ensured that Saudi oil, and by extension, most of the world's oil, was priced exclusively in US dollars. That meant any country wanting oil had to first acquire dollars, cementing America's currency as the backbone of international trade. This system gave Washington unparalleled power. It could print the world's reserve currency, borrow endlessly, and exert influence far beyond its borders. But now, in 2025, the tides are turning. The announcement that Saudi Arabia and Qatar are joining BRICS, while also shifting their oil trade from dollars to yuan, is a direct challenge to US supremacy. To fully understand the magnitude of this decision, we need to explore why it happened, how it changes the energy markets, what it means for the dollar, and how Washington is scrambling to respond. The collapse of the petrodollar. The petrodollar system was America's golden ticket. After the US abandoned the gold standard in 1971, confidence in the dollar wavered. Washington struck a deal with Saudi Arabia in 1974. In exchange for US military protection and arms sales, the Saudis would price all their oil in dollars. Soon, other OPEC members followed, and the petrodollar was born. This meant global demand for US currency skyrocketed. Nations stockpiled dollars, invested in US bonds, and built reserves around the greenback. America gained what economists call an exorbitant privilege, the ability to live beyond its means, running deficits while the world absorbed its currency. But privilege comes with risk. Over time, countries grew resentful of US financial dominance. Sanctions, trade wars, and Washington's weaponization of the dollar pushed rivals to search for alternatives. The cracks widened when China emerged as the world's largest oil importer and Russia sought to bypass Western sanctions. The dollar's supremacy was no longer unchallenged. Why Saudi Arabia and Qatar moved to BRICS? Saudi Arabia's decision wasn't made in isolation. For years, Riyadh had been drifting closer to Beijing. China is Saudi Arabia's biggest oil customer, and the two nations have expanded trade far beyond energy. When President Xi Jinping visited Riyadh, he openly called for Gulf states to conduct oil and gas sales in yuan through China's Shanghai Petroleum Exchange. For Qatar, the logic was equally strong. As the world's largest exporter of liquefied natural gas, Doha wants long-term stability in its energy partnerships. By embracing BRICS and yuan settlement, Qatar diversifies its financial risks and strengthens its ties with China and Russia, both of whom are major buyers of gas. The war in Ukraine also played a role. Western sanctions against Russia showed Gulf leaders that the US can and will weaponize the dollar system when it suits its interests. For nations like Saudi Arabia and Qatar, aligning with BRICS reduces dependence on Washington's financial system and offers them leverage in future negotiations. The rise of the Petroyuan. Switching to the yuan for oil trade is more than a symbolic move, it's the birth of what many analysts are calling the Petroyuan. China has been laying the groundwork for this for years, developing yuan-based oil futures contracts and building payment systems outside of US control. With Saudi and Qatari oil now traded in yuan, Beijing gains a powerful tool to internationalize its currency. For countries that import energy, this creates new options. Instead of holding US dollars, they can now hold yuan to pay for oil and gas. This shift reduces dollar demand and boosts China's financial influence. Over time, the Petroyuan could erode the dollar's status as the world's reserve currency. The move also strengthens BRICS as an economic bloc. With Saudi Arabia and Qatar joining, BRICS now controls a significant share of the world's oil and gas exports. Combined with Russia, Brazil, and South Africa, this group is becoming an alternative power center to the US-led West. The shockwaves in global energy markets. Energy markets are already reacting to this seismic change. Traders and governments alike are recalculating their strategies. If more oil producers follow Saudi Arabia and Qatar's lead, the dollar's dominance in the energy trade could unravel. For China, this shift secures its energy supply in its own currency at a time when global demand is soaring. For Russia, partnering with Gulf states allows it to bypass Western sanctions and expand its influence in global energy flows. Together, this reshapes how oil moves, who controls it, and which currencies matter most. Even OPEC itself could change. With Saudi Arabia's leadership and new BRICS backing, OPEC decisions may increasingly align with Beijing and Moscow's interests, sidelining Washington. For decades, OPEC has been a balancing act between producer interests and US influence. That balance is now tipping eastward. The end of dollar dominance. The biggest question is whether this marks the beginning of the end for the dollar's reign. While the dollar won't disappear overnight, losing oil pricing power strikes at the heart of its global role. If fewer countries need dollars to buy energy, fewer will hold dollars in reserves. This could drive down demand for US Treasury bonds, making it harder for Washington to finance its massive debt. It could also weaken America's ability to impose sanctions, as fewer nations would be exposed to its financial system. Critics argue that the yuan is not ready to replace the dollar, it's not fully convertible, and China tightly controls its financial system. But the point isn't immediate replacement. The point is erosion. The dollar's monopoly is over, and the world is moving toward a multipolar currency system. The global domino effect. Saudi Arabia and Qatar's move could inspire others to follow. Already, countries like Iran, the UAE, and even some African producers are exploring yuan-based trade. If a critical mass shifts, the dollar could lose its dominance not only in oil but in commodities more broadly. This domino effect also extends to US allies. European nations, long dependent on dollar-denominated energy, may be forced to adapt. Asian economies, which trade heavily with China, may also embrace yuan settlements to cut costs and reduce risks. The global financial system is entering uncharted territory. For decades, the dollar provided stability and predictability. Now, with competing systems emerging, uncertainty and volatility could become the new norm. What this means for ordinary people. For everyday Americans, the consequences could be serious. If global demand for dollars falls, the value of the currency could decline. That means imports become more expensive, inflation worsens, and interest rates rise. The standard of living, long supported by the dollar's privileged status, could erode. For citizens in other countries, the story is more mixed. Nations trading in yuan may benefit from stronger ties with China and reduced exposure to US sanctions. But they also risk greater dependence on Beijing's economic policies. Either way, the era of easy dominance by the dollar is ending, and the effects will be felt in households, businesses, and governments around the world. The road ahead. The decision by Saudi Arabia and Qatar to join BRICS and trade oil in yuan is not just a headline, it's a turning point in history. The global balance of power is shifting from west to east, from Washington to Beijing. Energy, money, and influence are being reconfigured in ways unseen since the aftermath of World War II. The US will not give up its dominance easily. Expect Washington to push back with diplomacy, pressure, and possibly new alliances. But the reality is clear, the world is moving toward a multipolar system, and the days of uncontested American supremacy are over. The loss of Saudi and Qatari oil to the BRICS bloc and the Petroyuan isn't just a blow to US prestige, it's a signal that the old world order is collapsing before our eyes. The dollar, once the unchallenged king of global trade, is facing its greatest test. And as the Gulf powers pivot eastward, the future of money, energy, and geopolitics will never look the same again. This is just the beginning of a story that will define the coming decades. If you want to stay informed as history unfolds, where every oil deal, every currency shift, and every alliance reshapes the balance of power, make sure you subscribe, share this with others, and join the conversation. Because the world is changing fast, and you need to be ready.